A big hello and a very warm welcome to HSBC Mutual Fund presents Informed Investing Season 2, partnered by ET Now. In today's episode, we're focusing on a very powerful trend emerging across India's Tier 2 and Tier 3 towns. Families aspiring for world-class education, grand celebrations, and unforgettable travel experiences. We'll explore how traditional saving tools often fall short for these evolving lifestyle goals, and how mutual funds, especially via SIPs, are helping families plan smarter with tailored time-bound strategies. We'll also be discussing the emotional connection to goals, the growing role of women in financial planning, and how MFDs are becoming trusted advisors by helping families visualize and achieve life's big moments. With that, our theme for today is goal setting for aspirational families. And joining me today, Kailash Kulkarni, CEO, HSBC Mutual Fund, Rupa Venkatkrishnan, Director, Sapient Wealth, Surya Bhatia, promoter, AM Unicorn, and Soumyajit Ghosh, founder, Wealth App. Well, all of you, thank you for your time today. And I'm myself quite kicked about learning from all of you and all the wisdom and experience that you guys have gathered over the years. But Kailash, if I could start with you. You know, we often talk about the aspirational Indian, the aspirational economy, where we're going to get to by 2047. But what's your own broad view of what is the potential really for Tier 2 and 3 cities that are sort of fueling the growth engine for India right now, and what could be the potential of that when it comes to investments?
So, Tier 2, Tier 3, I think that was a norm used some years back. We still have that norm, but honestly, the kind of wealth that is getting generated in the smaller towns is pretty substantial. People have built businesses, sold stake in the businesses. They've traveled the world over. They're seeing a lot of new things happening across the world. They're seeing new product ideas, getting exposed to, not the traditional products that they were used to at one point of time, which was real estate and gold. And now they're really getting exposed to some of the more marquee kind of products. And their aspiration is not just to enjoy that wealth, but also start investing it, looking at all the kinds of products and a 360 view of how the wealth should be managed. So we are seeing a lot of growth. And incidentally, I was just talking to one of the premier global wealth managers who set up shop in India. And they said that their clients actually come from now nearly 110 towns in India. So it's no more a metro city phenomena. And this I'm talking of a global wealth management firm who's really set foot in India and is looking at that kind of a base. So it's really good to see that story play out in India, and I think wealth is getting created and people are starting to enjoy their wealth. I think that is very important. Earlier, people are not enjoying their wealth. Today, they do a mix of both travel as well as invest. So it's a good combination to have.
Rupa, to just pick it up from what he was saying right now, Kailash, that I think the bigger question is there more acceptance now? And let me not talk about Tier 2, Tier 3 cities, because he's going to call me old-fashioned then. But the interesting thing about India is also, even a Mumbai or a Delhi are not similar as you go along, each colony or every street, right? India has so many Indias in it. Is there acceptance now more for financialization of the Indian economy, for more investing into financial assets? And like Kailash said, move away from the traditional means of investing, which is just gold and real estate.
So I think we need to look at how the evolution has happened for investment in India in the last, say, 2.5, 3 decades. I think what we have to understand is saying that we have moved from a scarcity environment to a abundance environment, correct? What does abundance bring in? Abundance bring in saying that you get education. Once you get educated, you are reading more, speaking to people more, and I think social media has created a lot of important change in the way people think. You go to small cities, big cities, or anything, the aspiration of spending, investing, aspiring to dress well, to to present well, to eat at restaurants and all is changing. India is changing. And that's where the financialization will happen, because that's where when you start working and then you have money to save and also to spend, you find ways how to financialize your wealth. And India is changing, and it's changing fast. And I think earlier on we used to say that tier 2, tier 3. I think we have to forget all of those jargons and say that it's India per se growing. So I think the financialization it's started, but now it is only going to be exponential, and the growth is going to be huge. And I think we are lucky to be born at the right time, at the right place in India. So to get this opportunity to get this financial...
I wish I was born now.
I wish I was born 20 years later, but whatever it is, I think I should be happy with what we have done and what we will be doing in the next few decades. So it's only the beginning, and I think we are going to become larger and bigger.
Surya, like Rupa said, you're watching on social media how to dress, how to eat, how to plan your weddings, where to go, all of it. Social media has changed the way we think, the way most of India is aspiring nowadays. But tell me, are families really putting that to use? Are they willing to then invest in the right way to try and reach that goal? How open are they mentally?
See, it's very interesting. The moment you talk about social media, it's a very difficult animal.
Of course.
So you really cannot tame it because its reach is exponential, just for the good as well as for the bad too. So you have to see how you can use that to your advantage. But we come back to what you were just saying. I think the growth of a goal-based is very important, because very simply put, the moment you create goals, something which is invisible becomes visible. The optics changes. I can know what I want to do, what I want to achieve, what I want to plan for my money. And moment you add, and that's where again I'm repeating, the tier 2 and 3 comes in very big play, because the moment you attach more emotions to it, I think the game changes.
Yeah, absolutely. And Somanjit, I think you're the right person to ask this, because I think in all of this, sometimes maybe traditional tools of investing kind of fall short into getting India to that aspirational India for each of us to get what we aspire via our financial planning.
Yeah, so when we sit across a client, all we try to do is to understand how his money and wealth will look like in the next 10 years. So it's not about the last 20 years what has done well for him. It's from the day he starts investing. And in that, as Surya just mentioned, goal is so important. And sometimes we even put numbers behind the clients, 2021 or 2930. That means he is going to achieve, say, 29 lakhs in 2030, like that. And it works in an amazing way, And that's where the newer types of investing that Kailash is talking about, and all of us are in the journey. These are the tools that actually help you know that how you can achieve your goals absolutely to the point. And as some of us know, that in goal-based investing, markets will always play a very important role.
Of course.
And as Indians, I think this is that paradigm shift that Indians are making. Whether you see the way we save for our pension, to we save for our kids' education, and for our retirement, we are moving out of fixed to, market returns. And I think in that journey, our fund managers and as an industry, the mutual fund industry, has done an amazing job over the last 30 years.
Kailash, I think what's really important is, and as your own research says, that, nearly 65% of Indian parents want to send their children abroad, but only 18% have formal savings planned in place for that. Everyone aspires for their kids to get what they didn't have as kids. But is there a mismatch between aspirations and financial preparedness?
So had you asked me this question, say, 7 years ago, I would have said there would have been a complete 100% misalignment between what was the expectation and what they had done. Because they would have planned it what they thought was right, but that may not have been enough to reach that goal. Because a lot of it was fixed return, super safe, may not be inflation beating kind of products which they were in, non-liquid. What's changed in the last 5 years, especially post-COVID, is liquidity has suddenly got a premium to it. Because people understand that, that second house and third house that you bought for selling after 15 years when your child has grown up, suddenly you realize, oh, the child's admission is there, but the house is not getting sold. So now I have to figure out where to get the money from. And the first thing they do is dip into their existing investment, which is liquid. And I think that liquidity premium, as people have started to understand it very well. So if you say that if we were like 1 or 2 on a scale of 10, 7 years back, today we may have reached about 4 or 5. Are we there at 7 or 8? The answer is no. But I think we are headed there in the right pace and the right manner. And I think, there are enough. So, 10 years back, possibly, like Swamijit was saying, you didn't have a track record. Today, there are enough people in the industry who've been invested for 10 years or 15 years, and they go and talk about how powerful these investments have been. So there's more word of mouth in convincing people to talk to your friends and family that, listen, I actually had invested for my child 15 years ago, and I've actually got more than what I thought I would get. So there are many more anecdotal evidences today in the market, which has helped the pace pick up substantially. But there's a long way to go for everybody to get into goal-based planning. And more so on the retirement side. I think retirement is still a subject with nobody
It's a different thing altogether. But, Rupa, is there more acceptance? Because, you within tier 1 cities also work with mid-income levels and even lower than that. Not to say that they don't have aspirations, but it's a different aspiration set. Are they more accepting of financial assets as a mode of investment? Or are they still stuck with my first house, my first car?
So my experience has been saying that most of the people don't know to do their money management.
Yeah.
Correct? The issue is with the money management. And the second issue is in the society there is a taboo of talking about money. Yeah. And the perception is, which is what is being created, that you need large sums of money to do some investments. Okay. There is a fear of even talking to a friend or anyone when it comes to money. You will talk about everything, movies, where did you go, which car did you buy, what did you see, everything. But when it comes to money, people don't even talk about saying that, oh, you are looking financially well off, where are you investing? Because of taboo. But what my experience has been, when I nudge people to talking into that and coaxing him to talk about money, I go back into that money management and tell him saying that you can do it. And the best financial instrument is a mutual fund where even 100 rupee per month can be done. When you go and talk to that level, and then you talk to him saying, him or her, and say that you can even invest 100 rupees or 500 rupees or 200, that conversation goes beyond, and it is more about acceptance, because the feeling is, I don't need large money to risk my thing, or I don't need large money to invest. So it is about nudging, and I can only tell you they are much more aware. They have that aspiration, but they don't know how to go about it.
And when it comes to financial planning,
Absolutely.
even people in the same house are all different.
Absolutely.
Each one is a different case.
I was just reading today some beggar in Bandra has some crores of rupees.
7 crores.
Yes. And he can do it. Yeah. Correct? So he's managed his money well.
Yeah.
So which means saying that it's not that somebody cannot do it, but yes, somebody needs a coach, somebody needs to plan his goals, align the goals with the respective instruments which are available, so that you don't feel dejected about, like you can't invest in an equity for 1 year. You have to have a long term.
Or buy a house for 1 year and think of selling it.
Yeah. So it's all about how do you align your goals with the respective financial instruments which are there.
Absolutely. With that, we'll take a very short break, but this special episode of HSBC Mutual Fund presents Informed Investing Season 2, partnered by ET Now, continues on the other side of this short break. We'll be right back. Welcome back to HSBC Mutual Fund Presents Informed Investing Season 2, partnered by ET Now. Surya, throw some light, this planning gap that we are sort of talking about. While you work hard to earn your money, you're not working hard even 1/3 to try and plan and make your money grow and, put some energy into that aspect of it. Mutual funds can play a very large role over here, right? Because they are the ones which can perhaps help you go about your goal-based investing. And now it's such a evolved financial asset class, right? There's hybrid, all of that can bridge your aspiration to action. Tell me, what role can the mutual fund industry play here?
I think the role of mutual funds have been phenomenal over the last, as everyone has been talking about, the last more than 2 decades of this journey, and has played a very important role in actually growing the financial markets. We talk about banks, we talk about other instruments coming into play, but I think, talk about insurances, but I think the MFs have played a very, very important role in this, and I think that's the way it looks like to be the case going forward also. The advantage it brings to the table is the flexibility, the various options, as you also mentioned, the various opportunities available in the same umbrella. And some fund houses now are trying to create a name-based strategy to attract investors. It could be, let's say, linked to your child's education. It could be any other goal which you may have, which typically has been the domain for the insurance companies. And that's what they have been tapping up various investors on this board. And I think funds are also following on that, which actually is, again, an emotional connect over here. But as times have told us, I think, and also some few researches we have gone through, I think if you do a utility-based, which is a goal-based planning, I think the returns on an alpha basis actually outsmarts your traditional investment by at least 10 to 15%, which is huge, which is really huge. Also, because you end up doing a goal-based planning, the mean reversion actually happens in your favor, because if you allocate the goal rightly to a certain product for a certain goal of yours, then the average of your returns over a period of time, let's talk about equity, works out well.
Yeah, absolutely. Kailash, that's such an interesting point, right? If mutual funds can just go about giving us goal-based solutions, life would be so much simpler.
So, it's very interesting that on one side, one industry has done very well on goal-based investing. They've come out with products of that nature, like Surya was mentioning. On the other side, the mutual funds have tried it, but not too many have succeeded. So, but the 3 of them, I know them for many years, and I can tell you that when a client approaches any one of them, they don't just take the check. They say, no, you have to sit down, talk to us, what's happening, what's not, what are your goals, and then only do they look at the check which is the client is written on the table.
If you go to a doctor, you got to address the symptoms. So tell me what you're feeling and what needs to be cured.
The good news is it's not just 3 who are sitting here, but it's many more people today in the industry who are now starting to move from being traditional distribution, where they'll just take the check and give what the client wants or just suggest something, to actually doing a kind of a proper way of enabling clients to, invest. I think that's the big change that we're seeing. I mean, the use of technology is now coming into play, and that's a very positive sign for all of us to see out there.
Right. And Kailash, I think the other aspect also is, like, pick up an example, your child's education. What your education cost was to what mine was to what it would be for Rupa when she's born after 20 years is going to be a lot different. We've also got to factor in the escalating costs for pretty much every aspect in your life.
And the most important thing which is there is your inflation on education is far higher than your normal inflation. So if you take that normal 6% or 5% or 4%, it's not going to work when it comes to education inflation. So I think these are the nuances which now clients have started to understand when people talk to them. The coach is talking to them. And without that, it becomes literally like throwing darts and you don't know where the dart is going to hit. So you need somebody to support you and help you and guide you in these matters. Which I just want to quote an example out here and how relevant it is. Just the other day I was sitting with someone and this person was one of the lucky few who started investing in 1994.
Wow.
Okay. And they sold their apartment. So he bought a very fancy apartment in Mumbai then. And then whatever, 20 lakhs he paid at that point in time. And then he sold it just now in 2021 or 2019, pre-COVID, at 3 crores. So the family was very happy. Okay, that 1995 you bought something, you sold it at 3 crores. So you from 20 lakh to 3 crores, you made some
But adjusted for inflation.
No, whopping profit. But that's, people don't look at it like that. So, but you know something, in 1995 he told me there were 6 mutual funds which were launched at that point in time. And had he invested in those 6 mutual funds, the worst of those mutual funds was 20 crores. And the best of it was 40 crores. So look at the gap. And this is not because of just some 5 or 6% outperformance, but 5-6% over 25, 27 years. And that's the delta which, so people now have these anecdotes, like I said, to talk about. And that's where the premiumization is coming. People are actually wanting to invest smartly.
Yeah. So Amajit, what role do you think the industry and people such as you can really play in, that's such a beautiful example Kailash gave. People don't even think of inflation. They just think that, 20 lakhs became 3 crores. What did you lose in that time frame? They don't want to even look at it.
So the roles that we are playing on a daily basis is to spend quality time with our clients, and none of us would like to, hasten that process. We give ourselves so much time, and at times I come across clients who will say, nobody has ever done this with me, and I make it a point to do it with even the clients who are coming with small amounts. Because the moment I put those numbers in place and look at his ability to invest more over the years, my daughter's picture come to my mind, and I see that, okay, when she will come to my position, this guy will become one of her best clients.
Yeah.
He may be starting with 1 lakh today per year, but the way this guy will do, this guy's portfolio will cross much bigger than 10 crores over the next 15-20 years. So the kind of time we spend makes the client happy, and it's a triple whammy for us. A, the client in front is happy. He goes home and talks to 5 people saying, do you know, I have spent so much time. I can't believe this guy just kept on taking so much time. And 3, his own wealth grows, which in turn creates a big client for me over a period of time.
Also, Rupa, I want to ask you, it's not just the growing population or growing millionaires and billionaires in India. It's also about the demographics between the male and the female population that want to invest, who are earning more, is also changing. Women investors are growing by the largest amounts, perhaps. That's where the alpha is being generated. Tell me a little bit more about any interesting anecdote that you may have come across.
If you look back 2 decades, 2.5 decades ago, families started having 1 child or 2 child. And that 1 child in most of the households have been a girl. And so that is changing, where a lot of women have started managing their money on their own. What I am seeing is saying that even in the lowest strata of society, every girl who gets educated now wants to manage her money on her own. Yeah. But she needs somebody to guide her. Yeah. Things are changing. I can see that in the last 5 years, the kind of women who want to independently manage their money. I also see between a husband and wife, where the wife wants to manage her money separate than the husband.
Yeah.
The mothers don't want to have any allocation of her decision making in the money that she has. I think women investors are the most patient investors. In our office, the returns on women portfolio is 2% more than the men portfolio. Sorry being biased.
No, I agree on this entirely.
So it's very clear.
Yeah.
Because they are very stable, they don't panic, They just you just have to handhold them during the periods of when the markets become very volatile, and they'll ask us, is everything fine? I'm safe, and that's it. So the returns, because of the compounding and they're not touching their portfolios are 2% more. And that's a reality, and that compounding impact, and that will change. Yeah. And I just heard JP Morgan's CEO talking about saying that in the next 10 years, in the whole universe, half of the assets will be with the women and half of the assets of the globe will be with men.
That's the data point.
That's the data point. So everybody over the next 1 decade, all the women are going to manage their own wealth. Things are changing, and it's only changing for the best.
Okay, on that note, thank you all of you. It was great having you in the ET Now studios.
Thank you so much.
It's a wrap on HSBC Mutual Fund Presents Informed Investing Season 2, partnered by ET Now. Thank you for watching.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.